share appreciation rights, or SAR. And so we have on January 1st, 2019, as a form of executive compensation, Walden Corporation grants share appreciation rights to Robert Brandt. These rights entitle Brandt to receive cash equal to the excess of the quoted market price over a $20 option price for 4,000 shares of the company's common stock on the exercise date. The service period is 3 years, which Brandt is expected to complete, and the rights must be exercised within 5 years. Brandt exercises his rights on December 31st, 2022. The fair value per SAR was as follows: 12/31/19, $3, 2020, $4.20, 2021, $4, 2022, $5. The quoted market price per share of common stock was $25 on December 31st, 2022. First, prepare a schedule to compute the compensation expense related to the SAR plan for 2019 through 2022. And so I went ahead and just kind of filled in these titles that we're going to use on our schedule. If you want to pause for a minute and add these to your Excel sheet that you're working with, I'd recommend doing that. And I'll go ahead and get started. We have 12/31/2019. Fair value per SAR on this day is $3. So the estimated total compensation cost would be that $3 times the 4,000 shares. So we get 12,000. Fraction accrued at this point is 1/3. And it's just going to automatically convert that to a fraction, which we'll just let that happen. So the total compensation expense to date would be equal to our estimated total compensation cost times the fraction accrued, which is 4,000. And so we'll pull that over to the yearly compensation expense. In this particular year, we don't have any accrued compensation expense yet, so that can stay blank. Now we'll look at 12/31/2020. We have a fair value of 420. And so same thing, 420 times the 4,000 shares gives us 16.8. This time we're 2/3. And so our compensation to date would be 11,200, or that total estimated compensation cost times the fraction accrued. The accrued to date is last year's. And so the yearly compensation expense would be the total compensation expense to date minus what we've accrued so far. So we get 7,200 for 2020. Now we have December 31st, 2021. And in this case, it was $4. So 4 times 4,000 gives us 16,000. The accrued fraction is 3/3, or 1. So the total compensation expense to date would still be that 16,000 times 1, so just carry over the 16,000. The accrued compensation expense to date is the 11,200. And so the difference is 4,800. Then on 12/31/2022, we have $5. And so we can say equal to our 4,000 times that 5. Again, we're still 3/3 because he completed his 3-year service period and he doesn't have to exercise them for 5 years. So that's why we're now having the fraction of 1. So again, really just pulling over that 20,000. Our accrued interest to date, compensation expense to date is $16,000, and the difference gives us the yearly expense for 2022. So now we have our schedule completed, and let's just do over here a sum. And we see that the sum is that $20,000 that we're saying is the total compensation expense to date. And I'll go ahead and make these number formatted so they're a little bit easier to read. All right, so then the second part is to prepare the December 31st, 2022 journal entry related to the SAR plan. So we put 12/31/2020, and we're going to have compensation expense, a debit to our SAR compensation payable, and a credit to cash. And so this compensation expense is equal to the $4,000, the SAR compensation payable, the $16,000, and the cash $20,000. And so that's our payment when Brant exercises his rights on December 31st, 2022. And I guess sorry, I thought we were done with this problem, but I'm just going to add one more comment. So that's where we're paying him the $20,000, but you also see that we're increasing the compensation expense for this year at the same time. So we're dealing with this last bit of expense, we're eliminating the entire payable and actually paying out the cash. Whereas in these previous years, we would have been increasing the expense and increasing the liability of the compensation payable.